The Nursing Home Fair Deal scheme to assist families meet the cost of one of their relatives in a nursing home uh, has been in existence for a number of years, but it has improved significantly in recent years, and people should be aware of that. Now, the basic way it works is as follows, and I'll give some examples to sort of illustrate what I'm saying because it can sound very complicated. Uh, Take the case of a single person who is on an income and has to go into a nursing home. Now, his income will be looked at, but he won't be assessed on his income. He'll be assessed on a reduced level of income. In other words, from his income, he'll be able to deduct tax, PRSI, universal social charge, any interest paid to repair or maintain his house, and monies borrowed to maintain or repair his or her house. Doctors' expenses can come off income in some cases, and if the person happens to be paying maintenance to an ex-wife, an ex-spouse, ex-partner, or in respect of a child, that can come off also. So let's assume that a person's income, his actual gross income, is €1,000 per week, and the nursing home fee is €1,000 per week. Let's assume then when you take off tax, PRSI, and all the other various things you can take off the gross income, his net income comes to €700 per week. He has to contribute 80% of that. 80% of 700 is 560, and the state will pay the balance of 440 to the nursing home. Now, in the case of a married person, they only have to pay 40% of their assessable income. So take the same example, a person who is married or has a partner for at least 3 years and has €1,000 per week, goes into a nursing home, the cost is €1,000 per week. They will only have to they will only have to contribute 40% of their income, which is 400, 40% of 1,000. Let's assume that the 1,000 is reduced to 700. They'll only have to contribute 40% of that. That's €280, and the state will pay the balance, which is 700, the other 720. Now, I'll give you an example of a single person. First of all, just take a single person who's this only applies to people who don't have any property. If the people have any property, such as a house, cash, shares, bonds, any type of investments, land, piece of land, etc., there will be a certain percentage of the value of that house or investment or whatever used to calculate extra income in addition to their ordinary income on which they pay 80%. I'll illustrate what I mean. Take the simplest case. Let's say a single person who's an old age pensioner. The old age pension is at the moment €289 per week. Now suppose they want to go into a nursing home and the cost is €1,000 per week. They'll be called upon to contribute 80% of 289. 80% of 289 is 231 per week. That's what they will have to pay themselves out of their pension, and the state will pay the balance. In the case of a married person, take a married pensioner, for example, who is claiming for his wife. He gets €289 basic per week and 259 adult dependent allowance for his wife, which comes to 548. He will have to contribute 40% of that. 40% of 548 is €219. That family will have to contribute, and the state will pay the balance. Now, the situation changes quite significantly if the couple or the single person happens to have property. In the case of a single person, take a case of a single person who is to pay 80% of his income. Let's assume he has a house with no mortgage and the house is valued at $250,000. His income will be calculated as follows. His assessable income, as I've already indicated, let's say he's a pensioner, it'll be just his pension, plus 7.5% of the value of the property for a period of 3 years. So take the example I've given of a pensioner. They will be paying the single pensioner I spoke about earlier will be contributing 231. But if he has a house valued at 250,000, he'll also be contributing 7.5% of 250,000 for a period of 3 years. Now, 7.5% of 250,000 is 18,750. That comes to 360 per week. So in addition to the 231, he'll have to pay another 360 for 3 years. That comes to 591, and the state will pay the balance. Now, people will say, okay, the guy has only €289 per week. Okay, he has a house, but his only income is 289 per week, and he's to pay 591. So how's he for 3 years? So how's he going to do that? Well, there are ways in which to deal with that, which I'll come to in a moment. Now, a married person has to contribute, as I say, 40% of their income instead of 80%. Now, the same thing applies to property. If a person is married, they contribute 40% of their assessable income. Take the case of a pensioner who has no other income, it would be 40% of his 289, plus 3.75%. That's half a 7.5, 3.75% of the value of his house for a 3-year period, just for 3 years. That would be 3.75% of 250,000 would come to about €180 per week. So he'd be already contributing 219, as I gave you the example a few moments ago, for a married person. Add 180 to that, and that comes to €399 per week that family will have to contribute. Again, as I say, it's a lot of money, but there are ways to deal with that. Now, take a situation where, go back to your pensioner who's only getting €289 a week, and he has to pay 590, whatever. There's a number of things that he can do. First of all, as a result of recent reforms to the scheme, he can let out his house. He can rent out his house while he's in the nursing home, and that rent is not taxable. That rent can go straight to the cost of keeping him in the nursing home. The alternative is to do an arrangement with the nursing home whereby they give him a loan of the extra income, the income attributable to his house, for a 3-year period. That means that at the end of the 3 years, he will owe the nursing home or the state, he will owe the state 22.5%, that's 3 times 7.5%, 7.5% of the value of his house, and the state will have a charge on that. So when he dies, he could live for another 20 years. This only applies for 3 years, but when he dies, the state will have first charge for 22.5% of the value of his house. Now that is another option, and that keeps the cost down. And as I say, the final option, the earlier one I mentioned, is instead of doing all that, he can simply rent out his house and use the rent to pay the balance of the nursing home charges. Now that all finishes after 3 years. He's back to his 80% of his basic income then after 3 years. Now, the concessions for houses that you only have to pay for 3 years has now been extended to other areas such as farms and businesses, but certain conditions have to be fulfilled before you qualify for those. And as I say, time or space doesn't enable me to go into those particular circumstances at the moment. But as I've said at the outset, if anybody wants to contact me about any aspect of these, I'll be happy to supply the information. Any other type of asset, we say cash, shares, etc., they are not exempt after 3 years. The percentage of those that is counted as income, in the case of a single person, 7.5% per annum. In the case of a married person or a person with a partner of at least 3 years, it's 3.75% per annum for as long as you're in the nursing home. So that's just the basic way the scheme operates. Needless to say, there are many rules, regulations, exemption clauses, etc., which I would be here all day explaining to you if I was to go through the full gamut, the full rules of the scheme. But you can feel quite free to send me an email on any aspect of it, and I will be more than happy to advise you.